For over 2 decades, one company on Earth controlled which countries could build advanced chips. ASML. That grip just took a real hit. A little-known state-owned company in Shanghai has started mass-producing lithography machines of its own. Not a lab prototype. Not a slide at a conference. Actual units, rolling off a production line, headed to real Chinese chip factories this year. The day this became public, ASML's stock fell 8% in a single session. So is this actually ASML's nightmare, arriving right on schedule? Or is there something buried in the fine print that changes this entire story? Here's the company nobody had heard of a month ago. Shanghai Aishengna Electronic Technology Group. State-owned, founded in August of last year, with 7 billion yuan in registered capital behind it. The information broke the story first. Reuters confirmed it a day later, and for the first time put a name to the company everyone had only been speculating about. Think about that timeline for a second. A company founded barely 2 years ago, already state-backed, already capitalized at 7 billion yuan, already shipping to 3 of the country's most important chip makers. That's not the profile of a scrappy startup stumbling into a breakthrough. That's the profile of a project that was funded to succeed from day one. But before you get too excited about that name, ask yourself something. If this is genuinely a nightmare for ASML, why did it take 3 separate outlets confirming the same leak before anyone could even say who built the machine? Here's what these machines actually are. Immersion DUV lithography systems. Deep ultraviolet, not extreme ultraviolet. That distinction matters, and we'll come back to it. These are the tools used to print circuit patterns onto silicon wafers for mature and mid-tier chips, the kind that go into cars, appliances, and a large share of memory production. The first machines are headed to 3 real customers this year: SMIC, Hua Hong Semiconductor, and CXMT, China's memory chip giant. 3 named customers. Not rumors. Not anonymous sources speculating about someday. Real customers. Real delivery dates. That's further than most China catches-up stories ever get. So how big is this, actually? Here's the number that made the market flinch. Targets sit around 5 machines delivered in 2026, climbing to roughly 20 in 2027. But those are the production targets, not confirmed shipped units. Keep that distinction in your head, because it matters for everything that comes next. And here's the number that should immediately put those 5 machines in perspective. ASML shipped 131 immersion DUV systems in 2025 alone. 5 against 131. 26 times the volume in the year before this story even broke. So why did a fraction of ASML's annual output wipe 8% off its stock price in a single day? Because markets don't just price in this year's numbers. They price in the trajectory. A country that couldn't build one working immersion DUV machine a year ago just proved it can build 5. The question every investor was actually asking wasn't how big is 5. It was how fast does 5 become 50. Here's where the story gets uncomfortable for the bulls, though. The Financial Times compared this new Chinese machine against a real ASML reference point, the TwinScan NXT 1950i. That specific ASML model entered the market in 2008. Not ASML's current flagship. A machine from 2008. Wait. That means China's brand new, just-announced system is being compared to hardware ASML sold 17 years ago. That's the actual generational gap independent analysts are describing here. Not months behind. Not a couple of years behind. More than a decade and a half behind the tools ASML is shipping customers today. So, is this whole story overblown then? Not quite. Because here's the part that makes it more complicated than either the panic or the dismissal wants you to believe. A Chinese outlet called ICS Mart, which covers this industry closely from inside China, pushed back hard on some of the more optimistic claims circulating about this exact machine. They disputed reports of a 90 to 95% stable production yield and cited a source at a domestic wafer foundry saying the system hadn't actually entered a commercial fab yet. As of the most recent reporting, it's still undergoing testing at Shanghai's Integrated Circuit Research and Development Center. So even voices inside China are telling you not to get ahead of this. That's worth sitting with for a second, because it's not the pattern you'd expect from pure propaganda. A government eager to oversell a strategic win doesn't usually let its own domestic press publicly dispute the yield numbers. The fact that ICS Mart could publish that pushback at all tells you something about how contested this story actually is, even inside the country that's supposed to be celebrating it. Here's a detail that undercuts the pure independence narrative too. Many of the critical components inside these machines are still imported from Japan. Delays at those Japanese suppliers are reportedly part of why 2026 output is capped at roughly 5 units in the first place. And Japan has been tightening its own export rules on semiconductor equipment recently. So the machine that's supposed to prove China doesn't need the West anymore still depends on parts from Japan to get built at all. Think about how strange that dependency actually looks from the outside. This entire announcement was framed as a declaration of independence from foreign lithography technology. And the fine print reveals a supply chain that still runs partly through Tokyo, at the exact moment Tokyo is closing that door a little tighter. Self-sufficiency, it turns out, is a spectrum, not a switch that flips on overnight. Let's assume, though, that China is right. Not completely right. Just right enough. What if this actually scales the way Beijing wants it to? Here's why that would matter well beyond one factory in Shanghai. This isn't one company working in isolation. Reporting indicates the effort consolidated DUV development teams from multiple Chinese firms, centered around a state-backed startup called Shanghai Aishengna Technology, which has direct ties to both Huawei and the Carrier Equipment Group. SMIC has reportedly already been testing a Aishengna machine since September of last year, months before any of this became public. Huawei, Carrier, Aishengna, Aishengna. 4 names that didn't exist together in most Western analysts' notes 18 months ago, now sitting at the center of the exact supply chain export controls were built to contain. If this consolidation actually holds together and scales past 5 units a year, the mature node chip market stops being a story about whether China can catch up. It becomes a story about how much of that market China simply stops needing anyone else's permission to serve. So this wasn't a surprise overnight breakthrough. It was already quietly running inside a real fab for the better part of a year before anyone outside China knew its name. Think about what that timeline actually means. While Western analysts were still debating whether Chinese DUV was even years away, SMIC was already 3, 4, 5 months into real testing, quietly, without a press release. The headline that shook markets in July wasn't the beginning of this story. It was the moment the rest of the world simply found out about a chapter that had already been running for almost a year. But there's one problem no amount of consolidation fixes instantly. Precision and reliability at scale take years to prove, not months, and ASML's current flagship, the TwinScan NXT2150i, has years of accumulated refinement this new Chinese system simply hasn't had time to earn yet. Here's the honest scorecard then. Not a paragraph. A scorecard. What's real? A working, domestically consolidated DUV machine already tested inside a real Chinese fab for nearly a year. What's unproven? The specific yield numbers currently circulating, which China's own industry press is disputing. What's the biggest problem? A dependency on Japanese components that undercuts the entire self-sufficiency narrative, right as Japan tightens its own export controls. What's the timeline mismatch? Independent estimates, including one from the AI Futures Project published within weeks of this exact news, projected commercial Chinese immersion DUV machines weren't expected until the mid-2030s. This story arrived years ahead of that forecast, or it's running years ahead of the actual proof. Possibly both. 4 questions. 4 honest answers. No spin in either direction. Here's why this still isn't nothing, though, even with all of that skepticism on the table. Remember, this is DUV, not EUV. These machines were never meant to print the most advanced logic chips powering AI training. They're aimed squarely at the mature and mid-tier market, exactly the tier that feeds cars, appliances, and a huge share of global memory production. That's precisely the segment where China's DRAM and NAND makers, CXMT and YMTC, have been gaining ground the fastest. Connect that back to a story you may have already seen. CXMT's stock surge, its rising DRAM market share, all of it depends on exactly this tier of manufacturing equipment. A domestic DUV supply chain isn't a separate story from China's memory boom. It's the foundation underneath it. Which means the real threat here was never a bid to leapfrog ASML's most advanced systems overnight. It's a bid to stop needing ASML at all for the exact tier of chips that actually pays most of the industry's bills. And ASML knows exactly what that tier is worth. China is projected to account for roughly 20% of ASML's net sales this year, down from 33% in 2025. Every unit of domestic capacity that comes online is a direct dollar figure disappearing from ASML's own future order book, machine by machine. 33% to 20% in a single year. That's not a rounding error on a balance sheet. That's a fifth of a multi-billion-dollar revenue stream, quietly walking out the door before a single independent reviewer has even confirmed these machines work at scale. There's a political layer moving in parallel with all of this, too. A bipartisan bill called the Match Act is currently working through the U.S. Congress, aimed at tightening the exact export rules this entire story is testing the limits of. Whether tighter controls actually slow this down, or whether they simply accelerate the same consolidation that already produced Aishengna and Yuliangsheng, is the real open question sitting behind the politics. There's a pattern worth remembering here, one that's shown up before in China's manufacturing playbook. Solar panels, electric vehicle batteries, shipbuilding. In every one of those industries, the same sequence played out. Years of dismissal, a state-backed consolidation nobody outside the country noticed in time, and then a single headline that made the rest of the world realize the gap had already closed further than anyone tracked. Whether lithography follows that same curve is genuinely unresolved, but it's the specific pattern every analyst covering this story is quietly measuring it against. Solar panels took roughly a decade to go from a Chinese afterthought to global dominance. Batteries took less time than that. Nobody knows yet whether lithography, a technology built on precision measured in atoms rather than manufacturing scale, follows the same curve or breaks it entirely. That uncertainty is exactly why this specific industry has been treated as the one choke point that pattern couldn't repeat itself on. It's also worth being fair about why past export controls haven't fully worked as designed. Restricting the sale of finished machines assumes the knowledge to build them stays contained too. Every consolidation like this one, pulling together teams, patents, and expertise from multiple companies under one roof, chips away at that second assumption a little more, regardless of how tightly the hardware itself gets controlled. So is this ASML's biggest nightmare, arriving on schedule? Not yet, and probably not on the timeline the headline wants you to believe. What arrived instead is proof that the floor under ASML's dominance in the mature node tier is genuinely less solid than it looked 12 months ago, built by a consolidated effort that's been running quietly inside a real fab longer than most of the world realized, still leaning on Japanese parts it hasn't replaced, still disputed by voices inside its own country. Not a nightmare. Not nothing either. Something narrower and stranger than the headline promised, sitting exactly in between. We're not going to know how real this actually is from a stock chart reacting to a headline. We'll know when SMIC, Hua Hong, and CXMT actually run these machines at volume, on real production lines, and someone outside China gets to measure the yield for themselves. The next video walks through the other half of China's lithography bet. The EUV program still years further behind this one, and why closing that gap is a completely different order of problem than the one this video just covered.